followers. So if McAfee is the most widely followed crypto person and Kate Perry is the most widely followed millennial musician, she's got 100 times the audience of crypto. So I think that crypto adoption, even among millennials, is probably 1%. I think it's actually quite small, but it also tells you there's a lot more growth in the future. So here's our take. The reason institutions don't care about crypto yet, they're following it, but they don't care, is because crypto is not even 10% of the addressable market for investments. And it's not even 1% of the addressable markets. Today, crypto, by our estimate, is only 0.1% of all investable assets. Now, here's how you can picture this. Each of these boxes represents $200 billion. And you can see the bond market is the blue. That's $86 trillion, so it's huge. The global stock market is $68 trillion. You can see all the boxes. At the very bottom is real estate, which is $230 trillion. Huge, huge markets. Art is a $17 trillion market, and gold is $9 trillion. Crypto's about one box worth, okay? So just think about this. If you're an institutional investor and you manage and you have to choose between these asset classes, you have one box that you could put money into crypto. It's so small, it doesn't move the needle for them. They can't put enough money into it. So here's the thing. Until crypto is 10 times bigger, I think institutions are going to ignore crypto. So I think until this gets to become a $2 trillion market, it is largely going to be driven by individuals and family offices. And that's good news because you're not competing with the pros when it comes to making investment decisions. Now, here's the other thing. You might say, okay, well, if institutions, when they start buying crypto, how is it going to move the market? One, you can imagine, it's $300 trillion that could be investing money into this tiny market. But we can see what happens with a recent example, which is Tesla. Now, I'm assuming you guys all know what Tesla is. It's they make an electric car. It's a great business, and it's truly a millennial company. But this is Tesla's stock price over the last 5 years. And as you can see, I parked in red that for most of the last 5 years, it was dead money. I mean, it went from 200 to 400, but the reality is, if you didn't see the right side of the chart, it was essentially range-bound, okay? And then you can see, in just the last few months, this thing exploded from $250 to almost $1,000. It went up by 4 times in just 4 months. The reason this went up by 4 times is because money managers, okay, what we call Russell 1000 growth managers, decided they suddenly needed to have some exposure to Tesla. Tesla is less than 1% of their benchmark, but they decided to go from 0 to 1%, and the stock price rallied 750 points in just 4 months. See those red lines? Each of those red lines is an $18 billion increase in market cap. Tesla had almost a $100 billion increase in market cap in 4 months because Russell 1000 managers wanted to get a little bit of exposure to Tesla. Imagine what will happen the day that institutions decide they want to get a 1% exposure to crypto. So you're going to see something like this. And if Bitcoin's at 100,000 or 400,000 on that day, in 4 months, it could be 10 times that. So again, this is something to really think about. Tesla is proof of how institutions, when they decide to get a little exposure, in a short period of time can cause an explosive price increase. Okay, now I mentioned why I thought the US mattered more than China for the next 5 years. And that's a bit of a flip because as you looked at crypto's evolution for the last 5 years, outside the US I would think has actually been a lot more important. But the reason it matters is now we're talking more about how money that exists today moves into crypto. And where is all the money in the world kept? Well, this is from Credit Suisse. This is a list of household wealth by country. In total, there's $300 trillion